Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted this week to be joined by José Parejo, founder, CEO, and chief strategist at José Parejo and Associates. Thanks so much for joining us today.
Thank you very much for having me here. It's a pleasure.
Great to have you. José, I mean, there's a lot of things obviously to talk about that are impacting energy markets this year. We've had a dynamic year. Oil prices have obviously dropped and weakened, but are steady. We've had the whole US tariff story obviously developing and up and down and keeping markets guessing, keeping businesses guessing, etc. And of course, we've got the whole geopolitical angle of what's happening in Europe and in the Middle East, etc. Would you say, I mean, just as a big picture question for you, just to set the scene from your point of view, would you say that, for example, geopolitics has been more disruptive this year, or steady as she goes, and the energy markets in general have been ready for that and have learned to absorb any shocks from that?
Thank you very much. We don't think that we are not walking through a particular phase. Geopolitics is evolving per se. It's the contextual element where everything happens. We are entering a phase where energy itself is statecraft. Power will no longer belong to those who dominate flow, but those who can govern interdependence without fear. The great divide in the 2030s won't be, on our perspective, north versus south or east versus west. It will be between systems that absorb ambiguity and those that collapse under it. Energy, for us, will no longer be a market. It will be like a test of comprehension. At JPA, anyway, we help institutions build that comprehension into operational foresight, because the 21st century will reward those who understand before they decide. But we don't see a particular phase now. We have been seeing consistently this across the history and the recent history. So not a particular moment for us.
Okay. And I mean, just zeroing in a bit on the US-China sort of trade negotiations as they've gone on this year. And of course, Trump's tariffs have flipped from this to that percentage, et cetera, not just with China, of course. But let's talk about their relationship. But in the context of how that might be impacting energy and minerals supply chains. I mean, is there, we haven't seen those disrupted. We have seen some exports from China alter perhaps. And of course, a lot of people are arguing that it's the US economy that will perhaps suffer because of the cost of materials that are going to now start to come into the US for things like its energy industry and other industrial manufacturing sectors. How disruptive has the US-China trade dispute or now in a détente at the moment impacted, do you think, energy market and sort of commodities markets thinking?
Really, we are not seeing decoupling. We are witnessing the birth of strategic redundancy as a doctrine. Over 85% of global synthetic graphite and some 70% of refined lithium are still processed in China. Even as extraction diversifies, transformation bottlenecks remain centralized. But the rivalry has shifted from ownership to definition. Whoever defines the standards, the threshold, and the cost curves control the midstream, where both value and legitimacy now converge. Definitely at JPA, we track this shift not only through trade data, but through changes in regulatory tone, the early semantics that reveal what is being normalized. What's shifting is not just trade, it's the geometry of trust. Standards are the new battleground, and midstream control is I would say, the new power. No? Sovereignty, not self-sufficiency, is the new currency of energy security. From Washington to Beijing, from Brussels to Riyadh, the question is no longer who supplies, but who defines. And those who define set the future. This
Absolutely.
our stand. Yeah.
Yeah, and that definition is, as you said, it's being sort of, I suppose, negotiated by now who perhaps in trade will gain the upper hand, in general trade, not just energy, obviously. You know, a lot of moving parts there. I mean, let's talk a little bit about, again, sticking to the US, but the recent activities with Venezuela. I'd like to get your opinion on that, the political pressure, most recently seeing that they actually might succeed in dislodging the current leader there. But again, I mean, in your opinion, what's behind the US attacks in the Caribbean on Venezuelan vessels? Is it just to control drug trade, or is it a part of their energy dominance sort of security? What do you think's behind that, and where do you see that going?
Sanctions have evolved, I would say, from punishment to architecture. Washington is no longer trying to isolate, it's trying to engineer flows. Venezuela now operates under three conflicted tie lines. I would say political normalization, technical recovery, and global demand for heavy crude. But Venezuela's future isn't shaped by the US alone. India and China continue to absorb heavy crude outside Western standards, while Gulf-based investors are exploring hybrid structures, meaning balancing access, compliance, geopolitical alignment. At GPA, we model this through parallel compliance scenarios, assessing what can flow under Western licenses versus what will move via non-aligned frameworks. By late 2026, we are projecting a partial re-entry into Western markets, likely around 350,000 barrels per day, but under stringent ESG licensing compliance. This will likely coexist with parallel flows toward Asia and the global south under radically different regulatory logics. I would say also that the key issue isn't whether Caracas produces more, but under whose rules that production is legitimized. That's the new battlefield for us, regulation as a vector of power. And that's where the next decade of sanctions policy will be decided on our perspective. Yeah.
Interesting. I mean, and in terms of sort of under this new policy that's going to form, you know, obviously you've got, you had the whole Chevron license being renewed last year, and that was again updated, et cetera, then it was paused. In the current scenario of things, which is, you know, a little bit volatile in Venezuela, would you foresee that there would be interest from other companies to start investing in the country, or we're going to have to wait and see in terms of external oil and gas investment?
Because these three elements that I mentioned before, Venezuela is a complex market. Latin America in general has its own particularities. It's a complex scenario. But Venezuela, I mean, as I said before, what the US and what Washington is articulating is a new architecture. It's a different way to project power and to control the flows, engineering those flows. So it's very complicated that under the current ESG scenario, licensing and so on, this could unfold a different perspective. But definitely, we are expecting that Venezuela will bring up, always under stringent ESG and licensing compliance. There will be a very different Venezuela, or at least some different Venezuela in the last quarter of the 2026.
Many people are arguing that geopolitical risk, I mean, you're saying you work with geopolitics, that has been factored into current energy prices, for example, with all the risk that there is out there. And that actually, 10 years ago, or any one of these events we're seeing around the world would have been pushing prices much higher and disrupting on that side. And yet it isn't anymore. Is that because of abundant supply, do you think, or because the models, everyone's learned to sort of price that into their geopolitical risk better into predicting what will happen with oil or commodity prices?
For many people, the geopolitics is like a risk, no? A geopolitical risk. It's like another component within the mix. For us, geopolitics is the context. Without that context, you cannot understand what is happening around. It doesn't matter if you are in Venezuela or if you are in China. That means that everything in a world, in a globalized world, with everything so interconnected, even though when different players, even important players, try to find out their own way through the markets, trying to leader other kinds of mentality, other kind of mindset, or try to combine forces in order to counter the status quo, even though everything is very interconnected. It's not so easy to change. Those transformations take time for those transformations. Look at the energy transition, how complex it is, because different countries see the energy transition in a different, and they are all legitimate, I mean, in their way. No, so it's very complicated. It's not just a matter of some countries try to, the BRIC countries or whatever, try to take ownership of a new leadership and try to counter what is the reality right now.
You mentioned the energy transition. Obviously, as you said, every country moves at its own pace. Europe has had its own trajectory. America has another. Asia, etc. Would you say, just to ask your opinion on, do you think the energy transition in general has taken a slightly backseat to energy security since the Russia-Ukraine war and etc. since then in terms of energy security? Would you say that we've seen a retractment commitment from countries or from companies?
It's
of course, Spain is one where your base is very committed to the energy transition.
Yes, but it's more complicated. It's not a matter of ideology. It's a matter of pragmatism. Okay.
Yeah.
The geopolitics of energy legitimacy I mentioned before. No? How governments balance the social cost of transition with the political need to preserve legitimacy amid volatile energy prices. A JPA will define energy legitimacy, I mentioned 2 or 3 times before, that as the new currency of stability. Governments today face a paradox. They must decarbonize fast enough to maintain credibility, but not so fast that they erode social consent. The political cost of transition is no longer measured in emission, it's measured in, I would say, patience. When energy prices become volatile, legitimacy becomes the first casualty. And once legitimacy erodes, even some policy loses traction.
Yeah.
This is why we believe that the energy transitions are not technical events, they are legitimacy negotiations, because every kilowatt now carries a political footprint. We model this through what we call the legitimacy equilibrium, the point where social acceptance, fiscal capacity, and geopolitical credibility overlap. In this balance lies the real resilience of nations. Every country is placed in a position, and is in a completely different situation relating to the other countries. And the energy future will not belong to those who innovate fastest, but those who can transform without breaking that social contract that they mentioned. And that, in a sense, is the geopolitical of energy legitimacy.
Looking forward to next year, what is the picture looking like for countries like Brazil and Guyana and those producers in South America, and Argentina, of course?
Yeah, and Suriname, for example. No, there is a Latin America is a region abundant in resources, yet constrained, I would say, but underutilized institutions. It's very complicated operating in Latin America. It's the first time that you try to operate there, because not only energy, no? Look at lithium and copper reserves are incomparable, but so is the complexity of operating there. No? Obviously, there is an opportunity for companies to try. We talked before when we were talking about Syria. We were talking about risk appetite. No? But look at, for example, in those minerals, for example, less than 20% of current contracts in Latin America align with emerging ESG standards. Not only those from the EU, but increasingly from sovereign investors from the Gulf, East Asia, even Africa. So this is, in the case of mineral, for example, isn't just about mining. It's about, I would say, trust architecture. In the global south, legitimacy is sort of the new license. So it's a very attractive market of a lot of opportunities in Latin America, but you need to understand how is that market, and you cannot go straight away like if you are operating in other places. No, it's important to understand, because there is another issue important. No, we are seeing in general terms in Latin America, those countries that you mentioned, but in general, in all Latin America, we are seeing a shift from contract of concession to contracts of legitimacy, where extraction must generate social permission, not only GDP. For example, at JPA, we track this transition using what we call a dual layer system, which is a methodology that connects structural imperative with measurable ESG threshold while integrating community level dynamics. If you don't integrate all these elements in the mix, you are going to fail. And probably you will not fail at the end, at the start. Probably you can get the contract, you get the go and the green light, and you can start. But then you will have problem because the investor who understand this shift is absolutely important because won't just gain access, but they will gain what I said before, durability. And in volatile system, durability is the rarest form of alpha. You just think in terms of economy. No?
Absolutely. Legitimacy is the name of the game. José Parejo from GPA, thank you so much for joining us and giving us your time this week on Halftime Talk. It's been great chatting to you.
Has been absolutely a pleasure. Thank you very much for having me.
Thank you so much. Thank you.